Lesson 3, Unit 4. Budget Control. Budget control is a critical responsibility of the project manager. Monitoring and controlling the budget ensures that only the appropriate project charges are included in the budget, that information about authorized changes is communicated, and corrective actions are taken by those in charge. The action of budget control is also a process of managing the budget. Controlling the budget differs from accounting reporting, which focuses on collecting accurate information on all expenses and ensuring they are all properly approved. The focus of project budget control is on ensuring that funds are used efficiently to complete the project deliverables on time and meeting the quality standards. The typical accounting reporting breaks down the budget into monthly reports. The total is divided by 12 months, and this information is used as the baseline to monitor the budget. But this information does not reflect the actual performance of the project, which has different dynamics on how the budget is actually used. The ideal approach is to use a baseline that closely approximates an S-curve to reduce the variances in cash flow. As you can see from the graph, the budget plan expenses follow the level of effort in the project. In the first months, the levels of expenses is usually low, but increases during the implementation and then lowers at the closing phase. This is a better approach to monitor and control the project budget. Budget reports are used to track the project budget and to provide a picture of how the project team is spending the funds. The typical reports used are the following. Expense report. This report provides expenses to date by account, project number, and funding code. Variance report. It shows the differences between what has been expensed and the approved budget. It includes the balance for each account. The burn ratio report shows the rate at which the project is using the budget according to the original plan, which is a quick method to see if the project budget is on track. A typical project budget expense report will include information on the status of the expenses made on the different cost accounts, showing the values for personal costs, professional services, equipment purchases, materials, travel, transportation, occupancy, and other direct project expenses. In this example, the project did not budget for travel, and the expense of equipment and materials were above the planned budget for the month. An expense with a variance report would show the differences between each account for a specific month and include the balances for the year. This is useful to see if the performance of the month. A burn ratio report will include information on the rate the project is using its budget for each account. Burn rate shows how fast the project is spending or burning through the allocated budget. The example below shows the burn ratio value for a month and the total burn ratio for the year. Budget performance focuses on the analysis to know whether the project expenses are being executed according to the budget plan or not. It helps identify deviations and develop corrective actions. In the chart, you can see the value of the planned cost in blue and the actual cost incurred by the project in red. The differences can help develop actions to avoid problems with cash flow and avoid surprises at the end of the year.